Good evening. Today we will be covering the post-market analysis dated 4th July 2022. Indian benchmark indices ended higher in the highly volatile session on Monday with Nifty closing above 15,800. Now, Nifty has to hold above 15,735 zones for an up move towards 15,888 and 16,000 zones, whereas on the downside support is intact at 15,600 and 15,500 zones. At close, the Sensex was up 326.84 points or 0.62% at 53,234. BSE Midcap Index added 0.8% and Small Cap Index rose 0.6%. On the stock-specific front, we have the following. HUL and Britannia were among the top Nifty gainers. Starting with the reasonings from general to specific, FMCG stocks surge with palm oil prices falling 10%, Nifty FMCG up 3%, 3 of the top 5 Nifty gainers are FMCG stocks. Last but not the least, we have share price of Indus India Bank rose by 3.07%. On the flip side, we have JSW Steel, ONGC and TCS down by 3 to 4%. Metal stock remain weak as global prices fall. Talking about the recent developments in the corporate segment, we have the following. Coal India Limited floated its first import tender on behalf of power companies, where Adani Enterprises Limited came out to be the lowest bidder. The company quoted 4,033 crore rupees for the supply of 2.416 million tons of coal on a freight-on-road basis. Behind Adani were Mohit Minerals and Chettinad Logistics, who quoted 4,182 crore rupees and 4,222 crore rupees, respectively. Between January and June, Gautam Adani-led Adani Enterprises bagged multiple contracts for coal import. Last year in December, the group shipped first coal consignment from its Carmichael mines in Australia's Queensland. To reduce its carbon footprint, JSW Steel has earmarked a sum of 10,000 crore rupees to increase use of renewable energy to replace thermal power and other green initiatives. Globally, the iron and steel industry accounts for around 8% of total carbon dioxide emissions. In India, it contributes 12% to the total CO2 emissions. Company has earmarked 10,000 crore rupees for investments to reduce the carbon emissions through various initiatives, such as increasing the use of renewable energy to replace thermal power, reduce our fuel rate through improved raw material quality via beneficiation and deployment of best available technologies. Bajaj Auto on Monday said it has commenced its 2,500 rupees share buyback program. In a regulatory filing, the Pune-based company said the buyback initiative has begun with effect from July 4. The company's board, at its meeting held on June 27, had approved the proposal for buyback of the fully paid-up equity shares of the company with a face value of 10 rupees each from existing shareholders, except promoters and promoter group, from the open market. The buyback will be carried out at a price not exceeding 4,600 rupees per equity share and for an aggregate amount of up to 2,500 crore rupees, representing 9.61% of the aggregate of the total paid-up share capital of the company. Electric vehicle manufacturer Kinetic Green Energy on Monday announced its partnership with Chennai-based Murugappa Group's financial services arm Cholamandalam Investment and Finance Company Limited to provide financing solutions to its EV customers. The collaboration is aimed at making Kinetic Green's battery-operated vehicles more affordable for the discerning and price-conscious buyers with attractive financing solutions, as well as catering to newer markets with Chola's pan-India presence. This relationship will help the companies in taking a step closer to fulfilling their ESG goals. Under this alliance, the biggest beneficiaries will eventually be the customers. With their strong network of 1,145 plus branches across India, they aim to offer the customers customized finance packages that would come with speedy, convenient and transparent processes. You can contact us from the details mentioned on the screen via missed call, WhatsApp or email. Thank you for being patient and listening the video to the end. Please do like, share, and subscribe the channel to know the latest updates in the market. That's all for today. See you tomorrow.